The last couple of weeks have been really fantastic trading weeks. Most of the Good afternoon, everyone. We had, as I said, the last couple of weeks have been quite close to fantastic, as you can expect in trading. Most of the traders or the trades that we had have been quite successful. The market has been moving very, very, very nicely between what we call the structural points and the significant points, and in particular something like the euro dollar and the US dollar also has been working quite nice. What I want to share with you today is one of the things that it is fundamental, it is imperative, it is crucial that whenever you are buying something, you are buying strength. The idea of buying low and selling high without knowing what the meaning of buying low is fundamentally wrong. You want to buy something because you believe in your heart, based on your work, your analysis, your expertise, that it is going to go higher, much higher than the current price that you are buying it at, and you would be able to turn around and actually sell it to somebody who is willing to pay that high price. So there is only one reason that you would buy something, is that you believe that it is going to go higher, and that means it is going to go become stronger, and you need that the price to show you, to exhibit to you that strength. Timing yourself into the trade is one of the techniques that we are going to train you, or we teach you on, but I want you to focus fundamentally on the principle. Buying low and selling high is, if you take it in an abstract, is fundamentally wrong. What you need to do is to buy strong, or to buy high actually, and sell it high. You want to have the price action to exhibit demand. Now, having said that, we are at Forex, at FX Street. We deal primarily, most of everybody here deal in foreign exchange, and foreign exchange is a unique instrument. And why is it a unique instrument? It is because you are dealing with two currencies. You're dealing with, let's take a look here, you're dealing with either the dollar Swiss, you're dealing with the dollar yen, you're dealing with the pound dollar. So you're conducting a transaction between two currencies. You're buying one currency, i.e., let's say we're talking about the euro dollar. So you're buying one currency and selling the other. Or let's you're selling one currency with the proceeds of that sale, you're going to turn around and buy the other currency. So you sell one and you buy with the proceeds the other. So in this case, you're selling the dollar, and with the revenue that you're selling the dollar, you're going to turn around and buy the euro, if you will, if you're going to go long the euro. In that case, you need to be buying the strongest of the strong and selling the weakest of the weak. Why? Because if you buy something that is strong, it will continue. It will be on the same premise that you're buying something that is strong. It is going to appreciate. So you're going to benefit from that. Let me show you what I'm talking about. So let's say we are here, and there is I'm leading into something. So at this stage of the game, let's say at 140, you are going to be buying, you're selling. Initially, the first thing that you're going to do is you're going to sell, let's say, 100,000 US dollars, and with the proceeds of that sale, you're going to buy an X amount of euros. Now, at this stage, if you buy the euro on the perception that it's strong, this euro is going to appreciate in value, start going up. Okay? And what you're selling is the US dollar, and that dollar is going to be coming down. Okay? Now, what's going to happen is there will be basically two, what we call trend lines, if you will. One trend line that is going up like this, and one trend line that is coming down. So the euro will be trending up, the dollar will be trending down, and you are capturing the difference between the prices, because if you buy the dollar, let's say, let's do it here, let's say, because of the lines. So at this case, if you're selling, let's do it 136. So at 136, you are going to short the dollar at 136, and you're buying the euro at 136. So the more the prices goes up, the distance between the price where you sold the dollar and the price where you bought, the distance between those are going to expand or widen. And the more it widens, the more profit you're going to make. Okay? And that is why it is primarily and fundamentally essential, specifically in foreign exchange. I mean, it's across the board in anything that you trade, but primarily with foreign exchange, it is much more profound than in any other instrument, is that because you're dealing with two, it's like trading a spread. You want that spread to widen, or the difference between the two prices to widen, to that spread to go out, like they say. Okay? Now, with that, having said that, that's what we do every week on our trade planning session. Every Saturday at 2 o'clock, we do our planning to see what trades we're going to take the following week. And with that in mind, we identify the strongest and the weakest, and we begin to see where the market is going to change direction. So, for example, here, now we're going to discuss the US dollar, and we're going to see our plan of how we're going to be trading the dollar again for the next week or so. I want you to look at the lower right-hand side of the screen. This is the dollar index, and one of the ways we plan our trades every week is to look at the indices, and there are several ways. As I said, any of you can send us an email if he doesn't know how to get the charts for these indices. Feel free to send me or send info at Training Traders an email. Will send you a link on how to get the indices. But it is a basket of all the currencies versus the US dollar, and with that you can see how this basket is working, how this basket is moving. And you can make a much better judgment by taking a more macro or a more global picture based on strength and weakness, and decide which pairs are you going to trade. I'm describing to you what we did last week, and you're going to see the outcome of the trades that we had from the prior week. Now, take a look. This is the dollar index, and as you can see, for the last 1, 2, 3, this was Friday, the 6th. This was the Thursday, the 5th. And before that, for the week before it, you could see that the dollar was trading in a narrow range. So some people would tell you, okay, buy support and sell resistance. This is supply and demand. This is all that. This is now a buying point. You should have bought this because this is support. And now this is, I should be buying that. You could very well buy it here and find out that next day this actually crashes down, because it is very similar to right here. I mean, if you look at this area over here, you could say that at one day or one time this was a support area, and if you didn't see this taking place, if you said, I'm going to buy it, if it comes down to 75.51, that is going to be support, I'm going to buy it. If you did that, well, see what happened to you right now. This would have been the outcome. So what we need to do is to see this kind of movement and then come and make a decision. Is this people buying the US dollar in this case because they do have a genuine interest in buying the US dollar? They are actually accumulating the US dollar, or they're just, the dollar has gone into a non-directional phase for 4 or 5 days. Are they actually accumulating it here, or it is just going into a la-la land for 4 days? If you look at this chart by itself, and I want you guys with a yes or a no to tell me quickly, is this here, if you did not see this, is this accumulation, or this is just la-la land, just going nowhere? What do you think? Do you think that, I'm going to ask a question, you type Y, or do you think this is accumulation? By looking at the chart, you're absolutely right. This looks much more of a la-la land. It is basically going nowhere. But it is not. If you look at this pips, whatever, it is not accumulation. I mean, if you say accumulation because you have hindsight vision, by we see that the movement have come up. But the way it happened to be accumulation. The answer is, when you are looking, Jerome, at the chart like this, you really don't have any, all what you know is that the price is moving in a sideways pattern, or has paused, or a trend has paused for 4 or 5 days, and that's all the information we have, and we really have no predictable value of which way at this stage of the game will it go. I mean, if you look at this and I ask you a question, assuming that you did not know what happened in the following 2 days, do you want to buy or sell? Okay, well, there is an easier way. There is a way when we are trading, again, hold on a second. Okay, that's good. When we are trading, guys, we do not need to guess, nor do we need to project an opinion, nor do we need to be right or wrong. What we need to do is to gather evidence, to gather information from the market to interpret what this truly is. I need to investigate what this is happening so that I can project now that the high probability is to the upside or to the downside. So if I put a line here, and I'm doing that so I can show you the date. So this is on April the 28th. Hold on a second, Sylvester. Checking the previous history. Okay, let's check the previous history, Sylvester. Unfortunately, we are at all-time low, my friend. This is historical low, Sylvester. There is no previous history. There is nothing but air. This is the worst the dollar has ever been in its history. So in reality, you have no historical reference. And that's why I'm saying do not take the idea of support and resistance blindly just because somebody, the easy way out is to say support or resistance or accumulation, whatever. Exactly. That's what I'm trying to teach you today, guys. So be patient. And that's what we do this is what we do every week, every single week, every Saturday. We do this. And I'm showing you one of the things that we do every Saturday so that we can predict or anticipate the move. So right here on as of the 28th, the market has gone into, the dollar has moved into a sideways, and we got to a stage we don't know if this is going up, they're accumulating it, or that it is just has paused. The way to do that is to begin to look, again, it takes us back. We are looking for strength, and I'm looking for weakness. Now, in this case here, this move here, this sideways move, is it strength, weakness, or neutral? We can say it's historically low, but exactly it is kind of neutral. Exactly. No, Carlos, it is neutral because this is all-time low, historical low. It is just paused, so it's kind of neutral. Exactly. So we start looking, exactly, Gerard, but what we do now, we start looking at the other currency pairs, and if we start looking at the Australian dollar, for example, as of the 28th, so if you look, this is the 28th, while the dollar was moving sideways, the Australian dollar put a high, and as of the 30th, look at the move that the Australian had while the dollar, take a look now, look at this move down, 1, 2, 3, 4 days, that Australian dollar is selling off, and if I take you back to the US dollar, on the 28th, it is moving sideways. So now we can see that they are, in a way, buying, in this case, I should have waited to the Australian dollar towards the end of but you can see now that this is moving nowhere, but the Aussie is actually selling off. If you look at the Japanese yen on the 28th, this is the index Let's put the 28th. What is the 28th? In this case, the yen has been going up for the last 5 days, so there is buying into the yen, and the dollar is moving sideways, so there is buying in the yen, and there is also buying in the dollar. You can see the Swiss franc on the 28th. There is also buying in the Swiss franc, and the dollar is moving sideways. If you look at the British pound as of the 28th, you can see this selling that is coming in as of the 28th. So by looking at this, at this group of charts, this is the Canadian. The same situation now is happening with the Canadian. And with the euro, you could see that, let's leave the euro for now, but if I go back and reverse the 5 charts again to you, and I'm going to open the floor for some questions, because I know I might have some people will have questions here. But if I look at the dollar right now at the index, and I see it moving kind of sideways like this for 1, 2, 3, 4, 5 days, and then I look at the euro, and you can see the same pattern, that it is moving one at the high or at the top of its trend, and the dollar is giving you this at the bottom of its trend. So you can see now that you have reached an actual point of neutrality. This is as low as this thing is going to get, and as this is as high as this thing is going to get in the last 4 or 5 days. So now you have reached the point of neutrality. That means that it should be breaking in one side or the other. Now, which side it is going to break? The first candidate is that the euro has reached this kind of equilibrium. The second, if you look at the British pound, you can see now that they started selling. So the British pound is weakening while they're buying the dollar. You could see that the Australian is weakening while they're buying the dollar. What this means to us now, that they are now selling the Australian, they are getting out of the Australian dollar, they are getting out of the British pound, they are now reached the point of equilibrium, if you will, with the euro. They are also selling the Canadian. So what's happening right now, they are selling the CAD, they are selling the Aussie, they are selling the British pound, they are selling the big ones, the Aussie, the CAD, the British pound, and they are unable to push the euro any higher. This means that now they are liquidating all these currencies, and now they are, with the revenues, they are now reversing. Just by looking at this now, they are now reversing their position in the US dollar, and that would indicate now that after a certain period of time, everybody that has been making money shorting the dollar, they are now getting out of their long position, and that would lead now, the high probability is that now they are accumulating the dollar, and now that means that we are going to start getting a short covering, and that is the move that we have in the dollar, and that was the position that we planned to take. And based on that, as of last week, the positions that we had was the following. I'll show you. For the euro, we started shorting the euro. That was the first short for us in the euro right there, which is right below the 147.69, and that is the accumulation that you have seen. So that was the trade that we took. It is now coming to the next structure point, which is the 143.37, and it's sitting right at it now. The British pound, so I'll tell you the numbers. The British pound, the break was on the British pound from last week was let me write it for you so that this is, you can follow how we are trade, is the 1.6662. These are our numbers that we plan in our trade planning. These are the numbers that tell us where the market is changing direction. And for example, let me put the British pound for you. Remember this number, the 162.66. There is the 166.62, I'm sorry. There is the break. And as you see from that day on, again, we identified that. We took the trade below the 166.62. And that was the lead. Again, we went to the indices. We identified what's happening in the market. So now they are accumulating. We have reached the conclusion that they are accumulating the dollar. They are not selling it now. They are getting out of their gainful position. They are getting out of their winning position. This is their winning position going up. The same thing with the Aussie dollar. It has been moving up. That is their gainful position. So I will send them to you. Rafi, send an email. We can send you the link to find that, or you can join us in the Sunday session or the Saturday session. With that, we have now said, okay, we are looking now. We don't want to be selling the dollar. Not because the dollar has fundamentally changed, not because that now the trend has changed in the dollar, but there is short-term accumulation that's coming into the US dollar, and now we are looking at, if for nothing else we can get out of our short position and not initiate new short position in the US dollar and start taking profit, and then we can also take advantage of the other traders who are getting stuck on their conviction to be short the US dollar. And with that, we started, when you go short the euro, John, contact somebody from the company, contact Mike Gallup if you have any questions. I'm sorry, guys. Gallup, could you put Michael Douglas, could you put your contact information for John, please? Guys, I would appreciate if you wait until I'm done because I lose track. When we say we're going to go long the euro dollar or short the euro dollar, this means we are going long the US dollar. When I say I am going to go short the British pound, this also means I am going to go long the US dollar. So when I say I am short the US dollar at 166.62, this means that now we are initiating a long position in the US dollar while we are shortening the euro and the other currency. And of course, we are now, if I'm going to decide which currency, now if I look at this here, we know that we have now decided we want to be buyers of the US dollar. Now, which of the other currencies will I be selling? Will I be selling the euro? Will I be selling the Aussie? Will I be selling the British pound? Which one will I be selling? Exactly. I will be looking for the weakest or the one that is exhibiting the most weakest, exactly, and the one that is going to be the first one to break to the downside. So I will be looking, for example, here to the Aussie. The Aussie actually is not the first one that broke to the downside was the British pound. That one broke right the day after. This is the first one that broke. They are all settled down on the 28th. The first one that broke was the British pound. And in this case, I know now by looking at what's happening and identify that these now are beginning to break. This means the move is towards buying the dollar. Now, my first candidate to be short is shorting the pound. And as you can see, the move from last week up to now is about 400 pips to the downside. Most of our trades that was, last week was about an average on every position that we were trading was an average. And these trades that were taken by the guys on the floor here was averaging between 200 to 300 pips on every single pair. Because the process that we go through is now we're taking the strongest currency and now the weakest, and they are liquidating and getting out of their position. And you can see the same continuation now in the pound. So before I go any further, I want to, because I see some of you writing questions, so right now I'm going to open the floor for a couple of questions and then I'm going to continue because I want to make sure that you guys have a good grasp of what I've just said. So does anybody have any questions he or she would like to ask? Okay, that's one. Okay, what else? Nilo is asking how to determine the weakest. Okay. The other question, does this apply to shorter time frames? Okay. What else? I'm going to combine them all in one global answer. Anybody has any other question he wants to ask rather than stopping me? Okay, so this is enough for now, and then let me answer these questions, and then we're going. So let me read the questions for you. The first one is, okay, John. The first question is how to determine the weakest. That's a question. The second question, does this apply for the shorter term time frames? The third question, what would be the best currency pair for a beginner? The third, in order to have a safe assumption for using the dollar index, we must always have in mind the percentage is the currency in that index. Okay. Also, link the index to the charts, please, because my mail was not replied to last time. No, I don't think so, but where should we be long the euro versus the dollar and at what price? Okay, so let's take these questions first. How do I determine the strongest or the weakest? The way we determine the strongest and the weakest is simply by, take a look at this here. Let me take this line, a visual appreciation to the price action. Everything that we do, as you have seen on my charts, we have zero indicators. No indicators whatsoever, no moving averages, no trend lines, no stochastics, nothing. And you always want to have your charts in a constant size. So always you would see that my charts are this size. It never changes. Why? Because my eyes now are trained to see the extent of this move. I can visually see the extent of this move. I don't change the size. Okay, the question is Milo is asking what do I mean by size? Okay, let me show you. Take a look at this here, guys. Take a look at this. And this is how we do it, okay? This is how we do it every week. Every Saturday, this is how we do things. So, for example, the very strong thing, we'll give it 3 pluses. So let me show you, let's say here, for example. So, for example, here the Australian, if it's very strong, we give it. Hold on a second. No, this is an old chart, John. Just hold on a second. So, if something is very strong, I'm going to give it 3 pluses. If something is very weak, I'm going to give it 3 minuses. If something is medium, I'm going to give it 2 minuses. If something is neutral, I'm going to give it 1 plus. So this way, if I wanted to create a trade, what will I trade? I have now that the pound is the weakest. So I can do this. Buy the pound, buy the Aussie, sell the pound. Or buy the dollar, sell the pound. Or buy one of those less weakest currencies and with the pound. With this case, now I have 2 candidates. I'll be looking at buying the Aussie and selling the pound, or looking at buying the US dollar and selling the pound. And if you look at the move, you can see that there is the move in the pound. It's the weakest, and the dollar is against. And you can see also the same move with the Aussie, the pound Aussie. You see the decline in the pound Aussie. And again, all what I did is I gained strength and weakness, and this way I put myself, these are my candidates, these are the ones with the hierarchy. So going back to Milo's question, how do I size it? Let me clear the lines for you. Now look at this move here. If you want to do it in a percentage, if you will, you're looking at this distance from this line, let's say to this line. You're looking at this distance. And let's say, look at this, the euro. Take a mental picture of this, guys. I want you to tell me now which is stronger and which is weakest. So I'm going to move this here like this for, let's say, 3 days, like this. I want to take a mental picture of this. You see this? Take a mental picture of this 3 last days. And then I'm going to put which is stronger, this or this. Which is weaker, I'm sorry. Is this weak? No, I'm sorry, I'm talking weakness now. Is this weak? Is this weaker? Or this, I'm sorry, or this is weaker? Which of those two is, I'll make one more change. Hold on, because I don't want to confuse you. Okay, this, look at, okay, give it another more day. Okay, take a look at this, guys. Take a look at this. I just deleted some days so I don't confuse you. Look at this. I want you to tell me which is weaker. Is the euro the weakest or the pound or the Aussie? Which is the weak? That's the Aussie. Here is the pound. Okay, so assuming that's the case, okay, fine. In this case now you can, again, all what we have done, guys, is that we visually compare the price action of the instruments within a specific time period. So in 3 days, the British pound came down from 166 to 165, came down 150 pips. The Australian came down a bigger percentage or a bigger pip move, whatever you want to do it. You can see it visually, and now it is a toss-up between the British pound and the Aussie. But for the euro, it actually during those days, it was sitting at the near the top high Sylvester, but it wasn't. So if I wanted to take a primary short, of an instrument short, my primary candidates would be based on the weakness. I would be shorting first the British pounds, which we did. I will also be shorting the Aussie, which we did. Exactly. Absolutely, Milo. And that's your job. That's your job as a trader. You want to push down the instrument that is weak. And the longer it stays weak, the weaker it's going to get. And you want to buy the instrument that is strong, and the longer it stays there, the stronger it's going to get. And by doing so, you already created a selection process that is going to be fundamental to your success. What the most fundamental thing, the second most important thing that a trader must learn how to do. And this goes back to the answer to the question that somebody was asking me, what is the best pair to trade for a new trader, a beginner? You want to be trading the majors, the dollar yen, the pound dollar, the major. You don't want to be trading the crosses. You want to be trading the major. But the second most important thing that you need to be doing in your career as traders, the thing that you must be powerful at, the thing that you should be able to develop to be able to do it instinctively, is what we call portfolio selection. Absolutely, Sergey. Brilliant. Portfolio selection. These are our traders. That is the key to your success. Choosing what to buy and what to sell, and then have the methodology and the techniques to know when to buy what you're supposed to buy and when to sell what you're supposed to sell. Your choice of the right instruments to trade is one of the fundamental keys to your success. Bob is asking me, I don't know of who. Who do you mean most of? Say euro dollar, is it so? What do you mean by that? Most people say that the best currency to trade is the euro dollar? Is that what you mean? Come on quickly, Bob, because the question he says most of, and I don't know what of means, says euro dollar is the best. No, absolutely not. Again, take a look at this here, guys. Take a look at this, Bob. Take a look at this here. This is the euro dollar, and for those days, the euro dollar was going nowhere. If you bought the euro dollar over here or you sold the euro dollar over here, you would have lost money. But if you traded the Australian dollar over here, you would have made money. If you would have bought or you would have sold the British pound over here, you would have made money. Currencies, if you go back, there are some seminars or other webinars I give on FX Street, or there are some webinars also on Training Traders website on how to identify the market condition. You need to know when is the pair moving. Forget what people say, this is the best, or this is his or her opinion. My opinion, if I tell you now the best currency to trade is the Australian dollar, What is the value of my opinion here? The value of my opinion is what I have. And forgive, right? But not that, just not particularly that. My experience, Genius, is actually what's in my bank account or how much I'm going to commit to a trade. So if I decide that I'm shorting the pound and I'm putting 5 contracts short the pound, that's my influence on that market. But you want the opinion of the market. No, come on. I'm not suggest. Number one, don't you? You need. I'll answer that question. Hold on a second. Hold on. So, the opinion, what you need, the opinion that you're looking for, is you're looking for a trade from the market to show you and to indicate to you which way it is going to go. Alex from England is asking, don't you think it is dangerous to suggest new traders to short carry trade and more volatile pairs like the cable? I don't think I suggested to anybody to short anything, nor did I suggest to anybody to, and I don't see how you say that the pound is a carry trade. What you need to do, Alex, if you're going to, again, if I tell you something like that, I'm voicing an opinion. The Aussie, if you believe that the Aussie is a carry trade, then you're looking at a long-term position. You are trading a carry trade, you're looking for that on a very long base term. So the carry trade means, what is the carry trade? Let me explain this to the rest of the group. What does a carry trade mean? A carry trade means you're going to buy, I'm going to type it, buy the currency with the highest interest rate, okay, and sell the currency with the lowest interest rate. Okay? What is the currency which has a higher interest rate, the Aussie or the British pound? Quickly, guys, quickly. Which has the Aussie? Exactly. So, if you're going to trade the Aussie pound, this is to answer Mr. whatever, Alex. Okay? Exactly, sure. So, if I'm going to trade, like I was telling you, the Aussie, what did I say today in this recorded session? I said you want to buy the Aussie. Here, let me show you you want to buy the Aussie and you want to sell the British pound. And I'm not saying that because this is what I was showing you on the chart, guys. This is what I just showed you a few minutes ago. The pound, the Australian, is the strongest and the pound is the weakest. Forget, I didn't take into consideration while I'm giving you this setup that this was because of the carry trade. This is what the chart has showed, and therefore it just happened that in this instance, while we're taking our short-term trade, that has confirmed the move, and in this case you're taking the pound Aussie short, and that is the chart for the pound Aussie, and this is our trade in the pound Aussie. If you want to see it, we are already short the pound Aussie as of 159, and then we shorted it at 157.80. So now we're up on our trade 500 pips so far. Okay, Alex? And we have been taking it short all the way from, this is the first short that we took, is from $2.22. Okay? So again, the reason I'm showing you this is, again, it's portfolio selection. The fundamental aspects of the trade is important, but the technicals are much more important. Okay. Exactly. You want to buy the strong and sell the weak, or buy anyway. So going back to your questions, exactly. I mean, Guy is asking, his question is, basically we understand, we create our criteria of buying and selling criteria by identifying primarily the strongest currency for us to buy, and then we also identify the weakest currency in order to sell. Therefore, we have now a pair. We pair the strongest with the weakest, and we execute the trade. Now the question is asking, guys asking, is when to do that. That is a topic that requires the timing into the trade. This is there are several ways and several rules and several methodologies depending on how you like to trade or what you do trade. But if you're going to follow the way I trade, then you have to be familiar with all the rules that we use, because again, the same way we have a hierarchy of choices of which to buy and which to sell, we also have a set of rules which also has a hierarchy. Rule number 1, rule number 2, rule number 3. We have the structure point, we have the significant point, we have the reversal point, we have the flipping point, and these are all the stuff that we train over here. But if you don't know the rules that we apply, the best thing for you, the second best thing for you is at least choose the strongest to buy and at least choose the weakest to sell. At least you have put now the odds on your side, and you have a much better chance of gaining on the trade. Let me see what hold on, there's some questions coming in. Hold on a second. The other time somebody was asking, does this apply to the shorter term? The prices have a fractal structure. The charts have what we call let me stay back away from the fractal. I don't want to confuse anybody. Yes, it applies. If you know, let's say, like example, let me show you what we did last week, what we did this Saturday, the day before yesterday. This is what we do every Saturday. We identify a short point and a long point. So a long point, this means that we are going to buy above it, and the short point means we're going to sell below it. And this is the structure long and the structure short. So these are our entry points. So for example, if we look at the pound dollar, this is what we did last Saturday, the day before yesterday. So our short entry, we are going to go short if it trades below 163.57. This was our trade plan on last Saturday, and it is crucial you guys follow your trading plan, or you can join us in our trading plan on Saturday. So we are short the pound dollar from below 163.57. It is now trading at 163.26. You're already up 25 pips, and you're taking that strength or weakness from the bigger time frame, moving it into the smaller time frame. The same thing with the pound Swiss. You're short the pound Swiss from 152.50. You are, there is no trade in the pound dollar, there is no trade. And basically these are the trades that we have so far, because everything is white like this. This means there is no actual movement. So these are the trades we're in, which is the pound dollar and the pound Swiss. The yen pairs, there is nothing in the yen pairs, and there is nothing. So you take your setup from the bigger time frame and you apply it for the shorter time frame to pinpoint the entry. Genius is asking me, what percentage of time do you focus daily setup pyramid versus intraday setups, directional setup? Okay, I need to be a genius to understand that question. I don't think I'm a genius to understand. What do you mean by focusing my daily trading setups? His question, let me show you. I'm not trying to be funny, but I really don't understand the question. I'm going to put it down so everybody can see it. His question, I'm going to read it again. What percentage of time do I focus trading daily setup pyramids? What is daily setup pyramid? Versus 200 tick intraday setup directional trades. No, I'm not getting hung up. I'm just trying to make sure that if he has a valid question, again, the questions maybe just because of the typing. No, I didn't mean it in any. Derogatory. On the contrary, you can't imagine the brilliant questions that's being asked in the room here, and I'm trying to make sure that I have the right answer for the benefit of everybody, because you guys, I don't think you see the chat. So no, I don't mean it. No, I'm happy that you guys are asking questions. That's why I'm doing this. No. Pyramiding usually means that you're going to. Okay. All right. Saying I'm going to answer Raphael in a minute. Gene is saying the intraday directional is when I trade the 200 day, the 200 ticks. Well, the way I trade, Genius, is the following. I take you need to filter your trades. You don't need to be taking every trade that comes in. Your directional trades would be from your daily chart. So I'm looking at, let's say, the pound dollar today. My short in the pound dollar this is the plan. I mean, this is the plan for the shorting the dollar is 163.57. Okay? And this is 163.54. That is right there is our selling point. And as you can see now, just by taking that trade, that is now a directional trade, because you can see that the momentum now, or the sell-off that's coming in, is in that direction. So just by taking that, identifying strength and weakness, and pinpointing from your planning session the point of entry. So the point of entry that we took is actually 54, and it's already coming out of the bigger time frame. So both of them are confirming, and therefore you have the quickest $300 that you can get on one trade. Okay? No, I don't check the index every day. You want to be looking at it again in context. You want to be looking at it once a week, once every 3-4 days. You want to keep perspective of things. You don't want to day trade the index. Otherwise, you're going to be... Okay, let me answer Rachel from Spain. Let me read her question. You guys, can you see the chat? Or you can't? I just don't know. You don't see the chat. Okay, hold on. Okay, hold on a second. Can you put the chat what he's writing, Rachel is asking? It's fine, okay. Okay, don't stop writing so I can read her question. If you short the week, hold on a second, guys, please give me a second. If you're short the weakest currency and your home-based currency is not the weakest currency, when you convert those profits, which is in terms of the weakest currency, to your home-based currency, the actual percentage return wouldn't be the same as if you would have sold the home-based currency. Basically what she's saying is that if your currency, when you lose a lot in the conversion of your currency, the way I trade, okay, is this. I hedge, my base currency is US dollars. Okay, so right now I'm hedging my account in dollars. So assume I have $100,000 in my account, I'm automatically, from my structure point, I'm short one US dollar contract. That now fixes my rate of exchange or whatever I do. Then I'm trading the other pairs, and once I come and do that conversion, Rachel, it will actually balance out. It's not going to be the perfect answer. You will always lose on that. And also keep in mind that if you are, again, you don't want to arbitrage. I mean, I don't know what, but that will give you the best. If you have the ability to, also, you know that all the banks and all the exactly they will actually tag on a couple of points, so they will end up eating you if you keep on doing it that way. So you actually have you have a fixed conversion forward rate if that's the case. So I hedge my base currency, and then you do your trading, and then at the end of the month or at the end you make one conversion and you're done. Okay? Yes, somebody's asking about the apprenticeship. Yes, we have boiled them down now to 25 people. We are doing the final live interviews today and tomorrow. And we're going to announce the candidates, the ones that are going to be hired, the beginning of next week. And these are the guys that we're going to hire. We'll make them the offer and they can come in and be here on our trading floor. And as I said, we're going to train them and fund them. The software package, yes, you can buy it. You can send Michael Gallup. Are you going to do a reality show on it too? Yeah, I would love to, but why not? Now, what we're doing is this is real life. I believe so much in the way we trade that this is the way to trade in the future. I'm putting my money where my mouth is. So the 20 people, we're taking 10 and 10 reserves. These are coming into the office. We are going to fund them, and they're going to be trading, and that's it. And we're going to publish their accounts, and everything's going to be public, and that's it. And therefore, if somebody wants to, I mean, I don't know what better way to do it. Okay, I'm trying. Hold on. I haven't heard from you already, Jason. I really don't know, Jason. I don't know who. We are keeping the last 26 people that have been chosen. We don't have any names on the tag, so that we're keeping it completely by like a code. So there is no interference. I like this person or I like. So once we boil them down to the initial 200, there is no names. There is only just like a barcode. This one. So you might get the email or not. So I really don't know because I don't know the names. It's next week, probably next week. I appreciate that, guy. Okay. So as you can see now, just by going back to what we have discussed looking at the pound. This was part of the portfolio selection, and as you can see now, it is the easy trade. The easy trade, why? Because the dollar is strong and the US and the British pound is kind of weak, and therefore you take the trade and you're sitting with it, and the longer you stay with this, you can see now the longer or the weaker it gets and the more gainful. You know now that by choosing the weak currency, this kind of fluctuation over here would not phase you out of the market. It will actually keep you in the trade. You would not get out of the trade. Why? Because you know now you're staying with the position. Even if you are going to take profits, you will not be reversing and taking it to the long side. You'll still be staying with it on the short. So let me see, I'll show you the trade from this morning. This is the trade right now. This is the trade that we have in the British pound. As you can see, we're short from 163.65, and we did not close the position, is open. Show you the intraday open position, the strategy position, the intraday. I have to put it to show it on the, some reason it's not showing it, I don't know why. Anyway, this is the trade. It is still open. Strategy positions, okay. Alright, okay. Anyway, this trade is still open from 60, so you're up this morning on the pound dollar, 40 pips. So you're up about $400 now on that trade. As long as it keeps on going, it's the weakest currency is Gerard. I'm going to stay with it. I'm not going to take it out. I'm going to stay with it as long as it keeps on exhibiting weakness, because this at least is going to test another structure short. You see here, Gerard, I'm sure you're with us, Gerard. This is the next structure short, which is the 162.97. We're sitting now at 163.16. So the next move down is towards the 160. It should go down to the next structure, which is the 162.97. So this is what I'm going to see how the decision is going to be made right there. Okay, the reason, this is a question, yes, the reason we're using the tick, Michael Douglas has answered the question to you. For the rest is that the question was, why do we use tick? Because we're trying to get a much more accurate representation for the price action. You might get a swing, a push in a time frame that you can have a small position or something, that an aberration that would push the prices higher, and it has a small number of trades that happen within that period of time, and that would be misleading. In our case, we want to get the price action to tell us which way the market is going, and I need as many price points as I can to give me this information, and that is basically what the tick is, because the tick is primarily each trade. Okay, so we have another 5 minutes or 7 minutes, 10 minutes to go. So let's use some Q&A, because there isn't much time to start a new topic. If I'm going to recap what I just said, it is extremely important that you at a minimum, have a way of trading, but you must focus on your portfolio selection. Yes, we use candlestick, and tick this is a candlestick of the tick. Okay, this is a candlestick, and I don't know which platform you use, Rafi, or which broker do you use. We take each candlestick of those is made out of 200 trades. Okay, send an email to Michael Douglas, and I'll explain. I'll tell you how to do that. So we take the 200 ticks and combine them together into one candlestick and plot them on a chart. I think the closest to what we do, the last 200 trades, yes. So it's taking the last 200 trades. Tim is asking the 200 trades. The last 200 trades are taken in, and it is plotted into a chart. So it's no, we don't use time. We don't use time. Time could be misleading, Tim. And keep in mind, most of the indicators now are using time candlesticks. They're using the open, high, low, close of the time. So it takes away our edge. We always want to identify something that gives us an advantage in our trading. Something that gives us, it is much more highly probable that when I take that pattern, I'm going to be able to make money. So by using the stuff that every single programmer out there is using, and all those, what everybody else is using, they are taking away from our edge. But if we use everything else, then yes, absolutely, Tim. Send an email to Michael Douglas. Mike and Gallup, put your email addresses. Some people are asking. Yes. We will see which platform it is. Yes, absolutely. It is the only thing that works. It is the only thing that works is the price action. I want to tell you something, guys, and I know some of you will not, you know for a fact, I'm not making this stuff up, is about 85% of the new traders that come into the market find trading very challenging, and they find it, at least, that there is a gap between what they realize, the amount of money that they can make from trading, and the actual amount of money that they really make. There is always this, oh, I look at the chart, I could have made 400 pips and I only made 5. That is always the case if they're not even losing. And that gap is something that 85%, if not 90% of the newcomers that come into the market, they face every single day, and they are not basically being successful. Now, these guys, what do they do? What do they use in order to reach this high level of failure or high level of non being able to make money? They're using the technical indicators, they're using the moving average, the trend line, the stochastics, and all that kind of lovely stuff. They are using that stuff and they are consistently not making money. Well, if you want to make money, well, the first thing you have to do is you have to stop doing what everybody else is doing and do something different. You cannot do everything else. I mean, you have a confirmed statistics that 90% of everybody that uses whatever they use out there lose money. How can you still use that stuff and you can expect a different result? You cannot continue to do the same thing over and over and over again and expect a different result. And that's why, by using price behavior, looking at the price action, moving yourself away, detaching yourself away from an indicator and a line and any subjective kind of tool out there, and focusing on the final truth, which is the price action, that is what's going to put the odds on your side and makes you successful. And that's why the price action is the only thing that the only thing that puts the odds on the side of the proprietary trader, unless you have a black belt. Somebody's asking for the code, guys. A good pull on the price action. I think maybe one of Mark Douglas's book, The Disciplined Trader, maybe, or the Trading in the Zone. These are good because they deal very much with psychology and understanding what you are doing. It is psychology, but what is price? Now, price is psychology, Carlos. I mean, I haven't seen anything out there in the market that does what we do. I mean, the way we trade the price behavior and understanding the price, unfortunately, nobody does it like us. I mean, if you want to learn this methodology or this way of trading, we're the only game in town. We're the only people that do that. This is our proprietary, we're not holding it a secret, but that is our way. That's what trade. Nobody knows how to do it. That's why nobody can imitate. So I haven't written a book about it right now, but basically I have learned from the Mark Douglases, and I have learned from the people that I have worked with them. I mean, there is no real secrets in the market. I'm standing on the shoulders of those who taught me. And so hopefully we will try to put it in for the 10,000 screen hours. But in essence, we will try to teach you. I mean, so be involved with us, attend the Sunday session, attend the webinars that we do here on FX Street. If you're in the UK, feel free to join us. You're very welcome. And we're looking forward to it, Carlos. Okay, guys, the index chart. Yes, I will swear to God that send me an email, Ghana, and I will send you the link. Send it to Michael Douglas, and I swear to God, I will send you the link. What website? Our website? Send it again, Mr. Ghana. Did you send it today? Okay. Was it your name, Ray Ray? Is your email Ray Ray? Okay. I think it is Ray. Okay, thank you. Okay, I got you. I got your email, Ray. Okay, I got it. All right, guys. Thank you very much, and have a great weekend. Thank you, FX Street, for inviting me. And I want to thank you all, and I hope you have a fantastic week. I hope to see you next month. All right? Take care, guys.